On the last hour of the trading day, yesterday, Friday, June 23rd, at 3:06 p.m., we detected unusual option activity on Nvidia. And so in this video, we will be analyzing what these 8,871 unusual options mean, and then show you how we are trading Nvidia based on these unusual options. So without further ado, let's get right to it. Today is June 24. Market is closed. And this coming week, these options will be expiring June 30. And we'll see here the price was $200 each, much higher than what the market was going for. So this is very aggressive buying. Okay, so $200, 8,871 contracts, $1.77 million of value, this trade here. So a large investor, very, very bullish on Nvidia for this coming week, June 30. So when we take a look at that 450 strike price calls, you'll see here the open interest here of 6,549 is less than the 8,000 we detected. So we know these are opening orders. And we know that when you analyze this trade, this is bullish. Keep in mind, they did not pay $159, and I actually paid $2, which is $200. Right, so that's actually the price that they paid for these call options at the 450 strike price call. So Nvidia would have to move very quickly up by the end of next week. And at the end of next week, it has to be above 452 here, about 452. This is their break even here because they paid $200. So it's not just it's the 450 strike price plus $200, which is $2 is 452. So that's how the break even is calculated. So if we take a look at the charts, you'll see that Nvidia hasn't made 452 yet, or 450 for that matter. 52-week high at 439.9. But keep in mind, Nvidia so far this year has rallied close to 211%. If we look at what it ended up with at the 422, close to 199%, close to 200%, right, already. And so is there more room to go up or down? We will find out in a week if these call options are going to be true in the price action for Nvidia. Comment below on what you think is going to happen this coming week for Nvidia. Will this break 450, or will we be pulling back further? Because if we look also at the Fibonacci's from that rally after earnings, we can see here actually that if we look at we pull that Fibonacci, we are actually right at the first level of the Fibonacci's, the 23.6%. So that is also interesting. When we look also at the volatility, you also notice that we are actually pretty low. The volatility IV percentile, 4% at the moment for Nvidia. And this is the reason why we are trading a strategy that is taking advantage of this low volatility. We are, instead of buying those 450 strike calls, which has a very negative theta, very risky, we are selling the 450 strike calls. And we are then going out to the July 7th, 13 days away, the next week, next week, expiring, and buying the 450 here. And we are creating a calendar spread, which is going for about the same price, about $200. And you'll see here when we analyze this trade, let's take off the unusual options. You'll see that this is our trade. Currently Nvidia at 420 here. So if it does hit the 450, we'll reach that max profit here. It has the potential to make 817, you'll see here on the blue line at expiration. And you'll see on the left side, middle left side, the max profit there at expiration. And you'll see that also we have the potential to reduce our risk. If Nvidia starts to go down in price, we won't lose our $200. Immediately we can cut our risk by managing this trade. So you'll see that price is very similar to the two trades, and you'll see we have a positive theta. And so that's what we like about this trade, and also this positive vega, also the positive delta, which you get for this bullish trade. You'll see that these unusual options at 450 strike price have a very negative vega, negative 42. So we do not want to go with this trade, very risky. And also we can get the same vega, the 11, with our calendar spread. As we showed here, it's also 11 vega. So we want to take advantage of that. Vega will increase if Nvidia does drop a lot and volatility increases, so that would help this trade. It would actually move this curve of our calendar spread entirely upward. So we actually would make more, or we would lose less if the price was going down. You can see that by, for example, if we were to add a 20% volatility to this trade, notice how everything just shifted up, right? And so now the losses are less and the gains are higher. You'll see now the max gain here is 1,321, right? Okay, so that is why we like this strategy. And if you are interested in our trade strategies and how we trade based on unusual options, we do have a membership that is exclusive for members only, where we have exclusive videos. You can click the join button on our channel homepage to learn more on how to join. We also analyze other unusual options activity on other stocks, not just Nvidia, because we want to diversify our portfolio to increase our chance of profitability overall. So click the join button on our channel homepage to learn more if you're interested on making more money. And subscribe if you haven't. Hit the bell icon. You'll be notified whenever we detect unusual options activity. Please give us a thumbs up. Encourages us to make more videos. And as usual, take care and have a wonderful weekend.